presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Oh, look who we have. It's a beautiful day. Look at our man, Jim from Minneapolis. We're going to take it by storm.
Taking it by storm, baby.
I love that. That's a great saying, man. Hey, what's happening, brother?
Good morning, gentlemen. How you guys doing today?
Good, man. Yourself?
Oh, man. It's been the most incredible couple of days since when I called in on Friday, Litecoin busted out of that consolidation on the 2-hour chart.
Okay.
And it just never looked back. It did a 100-point ABC up, and now it's very extended the way I look at it. But holy, I mean, it went up to $420 last night.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 7.5 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Serve the one you love. Once you decide to be a couple, you're there to serve the one you love, to serve your love to your love. In every kiss, in every touch, you feel you're there to please the one you love without expecting anything back. Market-wise, let's take a look at it out here. We have the Dow Industrials up 269, Nasdaq's down 5, S&P's up 11, gold contract down $15.50, trading $19.37 an ounce. Silver off 37 cents, $27.07 an ounce. Light sweet crude off 39 cents, $43 flat. Notes and bonds. You get the 10-year down 10 ticks, trading 138.31. 30-year off a full point plus 25 ticks at 170.612. And King Dollar. King Dollar's down 17 ticks, trading 92.989. The euro is at 118. The yen is at 106.58. And the British pound is at 132 to 1 U.S. dollar. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? Well, bottom line is that when we pull this up, you are going to see another high out here. We get the SPY right now. Trading over the highs of yesterday. You're up $1.64. You're at 349.21. High of yesterday out here was 347.86. We go into the futures market. We take a look at the futures. What you're going to see with the E-minis out here. E-minis got to a high out here today, folks, of 34.98, and right now you're only 7 points away from it. That being said, bottom line is that intraday out here, we had a bear market, and man, it was a big bear market. It lasted all of about 4 minutes, which most of them have been lasting lately. Bottom line is that we get down to 34.64. Gave it up in spades, and yes, I did use one of the Tigers. Someone in the Tigers Den said that yesterday, folks. I had to bring this up because it is just, I thought it was pretty funny, actually. You know, a 4-minute bear market. Bottom line is this, you know, we get up to these highs out here this morning. No juice whatsoever on the highs this morning. You came back down. You have juice on the way down. What it was trying to do is get into the lows that were established out here yesterday at 3 o'clock in the afternoon. 2 points away from it. We'll see how this shakes out coming into the close. That's the bottom line. NQs. We take a look at the NQs. Bottom line, really, you know, they're down, but it's really almost a sideways move. I mean, this thing has been exponential. 12,046 is the high out here. Right now, you're only down 27 points. What both the NQs and the S&P had done, they did, you know, after they came down this morning at, you know, 12:50 Eastern Standard Time, made a run back. Now, what has happened is that the S&P has actually made a larger retracement than the NQs going back to the highs. So this is going to be pretty cool watching how this is going to shake in to the next 50 minutes. Gold contract. We had you had Powell come out here this morning. Bottom line is that they are going to let inflation run, and they want to average out 2%, not just have a 2% deal. So they've had a very, very tough time, folks, keeping inflation. Well, let's back up to 2007. Bottom line, they want inflation to basically run at 2%. Bottom line, You get inflation. The battle is inflation versus deflation. Deflation had been winning for quite some time. What they have now is that they want to do an average of 2%. So if you're running at 1.4, guess what? They'll let it run at 2.5, 2.7. Bottom line, we'll see how this baby shakes out. That being said, gold market took off exponentially for all of about a minute and a half. Gets up to a price point up here of 1987, and then the next 20 minutes gives it up in spades, goes all the way down to 1914, trading out at 1937. That being said, what gold and silver has not done, they couldn't even take out the low of yesterday. When you can't even take out the low of yesterday and you have a move like that, folks, the bottom line is that if we weren't looking at the markets, what you'd be looking at is that you'd be looking at both metals higher with volume, gold and silver still on higher price. King dollar. What do we have with King dollar out here? King dollar, bottom line is that what you have out here is that you have a sideways move out here today. King dollar did just the opposite of the gold market. King dollar came down hard and fast to 92.417, bounced all the way back up to 93.319, and you get a sideways move. That's how this thing is shaking out. So we'll see. Let's put it this way. It is easier looking at the gold contract, understanding, we're speculating. I'm speculating that it wants to go higher, versus looking at the dollar right now because of the way that the dollar actually traded. The larger take on the dollar for me is that we are going to 88. This is a building cause to go down to the 88 level. Notes and bonds. We pull up this bond market, folks. Bottom line, this is going to shake up the market a bit. What you have out here is that you get the 30-year breaking a swing point today, breaks it with volume. You get an ABC structure on the way down. We've had volume come out of it for 2 days. You're going to have some volume out of it today. That's saying the note and bond market wants to get out of 170.30. Now, that being said, folks, what you also have is this. The Federal Reserve is going to control the bond market. There's no if, ands, or buts about it. That's one of their tools. You can see out here today, they're more concerned with the 10 than they are with the 30, which would make sense. They have more control over short-term rates. Not that they have a huge amount of control over the 10. Over the 2, they have a huge control. That being said, this 10 wants to break too. The 10 right now, you get 2.2 million contracts traded. The swing that it's going after is the 139.28. We made 138.28. We made 138.30. I suspect it's going to get croaked, and that's going to get down into this 136.22. Our phone number is 877-927-6648. We come back, we're going to talk about a partnership. This is like something that you just, I would definitely never expect. Microsoft and Walmart want to go after TikTok, and the market likes it in both cases. They're bidding both of them up. The last thing you'd ever think of is Walmart going after TikTok. Yeah, but guess what, folks? They're going after TikTok for advertising in a monster way. Dow is up 262. NASDAQ is down 2. S&P's up 10.5. We'll come right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks. The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The Gold Report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow's up 278, Nasdaq's up 4, S&Ps are up 12.5. Let's go to Andy in Boulder, Colorado. Hey, Andy, what's going on, brother? Okay, so
how much, Tom? How you been?
I'm doing great, man. Yourself?
Good, good. Thanks. Just living in the 4-minute bear market, right?
Yeah.
That's great.
Seriously, man.
So, listening to you for a number of years and got in the GDX about a month or 2 ago and then playing that a little bit and then got reminded why the juniors are what they are. So I went ahead and Tuesday, I liked that candle that happened Tuesday a couple of days ago. So I went ahead and got into the GDXJ.
Okay.
But I noticed that, and I apologize, I probably should know this about the GLD, but I see the GDXJ also has like Pan American Silver,
Yep.
Hecla, things like that too. And I know whatever you dig out of the ground, you want to sell no matter what it is. So, but what do you think of the makeup of the GDXJ?
I really like it. Yeah. So let's take a look at it. So the GDXJ, folks, are the junior gold miners, okay? You get Goldfields is 6.7%, Kenross 6.4%, Pan American 5.1%, Northern Star 4.5%, Sylvain 4.4%, Evolution 4.2%, Yamana 4.1%, B2B Gold 3.5%, Fresno 2.4%, and Sakharin, I don't know that one, it's 2.4%. Now the reason I like it is this. So what happens in the gold market, folks, when you get gold that is at a price like this, is that the juniors are the ones that really are in play, and we haven't had play yet, meaning, but if the majors are going to buy something, they're going to go into the juniors. And they may go in the exploration, but that's a far reach. Do you know what I'm saying? But when you're going into a junior, what is happening, some of these juniors, push out some real product. Do you know what I'm saying? So,
right. Yeah.
I
they
like,
already have, what they need to dig, basically, right?
That's correct. They
get all the profit or whatever.
They would rather, let's say that if you and I, one of the big dogs, and in any business really, in the mining business in particular, because it takes so long to build a mine, is that they would much rather pay a lot more money knowing that has it been consistent? What is the ore? How much ore can I get out of how much metal can I get out of the ore? And the reason is that the person that's buying it, or the corporation that's buying it, would be bullish on the actual price of the metal, and are bullish on the aspect that, okay, we have a structure right now that, gold is trading at 1937. These large companies know probably to the tons how much gold and silver and copper is around the world right now, and what price to get it out of the ground at. Do you know what I'm saying?
Yeah.
So
Yeah.
even if they think that that the metal itself is not going to move much, as they're depleting their resources, they have to buy it. This is like a very unique situation, folks. This is not like a tech stock or a razor blade factory that you press a button and this stuff keeps getting made. If a Newmont or a Barrick, any of these large, and Eagle, as they're digging out, if they don't get more resources, their stock's going to go down, man, because, if you don't have supply, it makes a difference,
Oh yeah, and hey, I apologize if you touched on this topic the past couple of days, because I just been out of it, but I appreciate your time looking at this, and just want to make certain that my thinking process was in tune with yours, and I'm definitely going to start piling in a little bit here.
It's, what's going to be intriguing, Andy and folks, is tonight. And this is why. The battle out here today, we know Fridays in the market for the metals market can be a really rough one. That's the bottom line. Yeah. Now, when it's going with us, it can be exponential. That's the other side of it. Right now, this battle is unclear today. It absolutely is. Do you know what I'm saying? So if you're gonna bite more, I would actually just wait till tomorrow morning, just to see how this dollar straightens out. Because see, the dollar has been, this is like one of the weakest bounces I've ever seen in any type of structure that we trade. This is like pretty crazy, man. I mean, if we go back, let's see, if we go back to June 25th, no, it's May. Yeah, May 25th. The dollar was at 99.975. It went straight down for almost a month. It bounced, a real dead cat bounce again. It bounced for like another month. Goes south again for a month and a half. And then this bounce here is so anemic, it's unbelievable, man. And today is just a tough one to figure out. But, longer term, I think we're going to 88. But if this thing blows out its lows, man, like, we're going. And if you put that together with Powell is talking about, the bottom line is that he's telling more than the gold market. He's telling the gold market, he's telling the real estate market, he's telling the stock market, he's telling everyone that interest rates are going to stay very close to zero for a long period of time, number one. More important, what he's saying is that if you take just 2 to 2.5%, and you do that out for 20 years, folks, you'd be surprised. That's a lot of wealth that goes down the drain. So people are going to want either equities that are building value, right? Real estate's building value, gold is building value. That is on the table, man. So.
Okay. Hey, technically, real quick on the GDXJ, 55 looks great, but do you think it will get down to, 53.24 or 53.25?
I don't. What I said, and I knew when I was saying it, you know what I mean? That, okay, wait till tomorrow morning, and I'm sure you're saying, well, what if gold's up $50 tomorrow morning? Just don't go head over heels, tonight.
Sure.
You can do half and half. That's my point more than anything. Do you know what I mean?
Sure.
Yeah.
Sure. Yeah. Thanks a lot, Tom.
Cooking, brother. Have a great one, man. Have a safe one.
You too. Take care.
Thanks, man. We had a question in the den, and the question was a great question, actually. As to the aspect of bonds trading lower, what is the ramifications in the equity market and the metals market? In the metals market, folks, it normally is pretty quick. Okay. Bottom line, if interest rates, do go up, the bottom line is that, the whole thing with, gold and silver, they don't pay dividends. They don't, interest rate structures going up would hurt that, just as it would hurt the mortgage market, right? The equity market, what we haven't seen is bonds go south very quickly, and that would also nail the equity market in a second. Because of the fact that, there's the amount of money that's swishing around. That being said, I would still pay more attention to, we can go to those June lows, but you have to pay attention to what the Fed said. The Fed said flat out, and they're gonna keep rates low. So they'll come right in there and buy like crazy and just bring it right back topside. Stay right there, folks, and come right back.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. TFNN has developed a daily programming lineup for traders by traders. We start every trading day live at 8:30 a.m. with Tommy O'Brien hosting the morning market kickoff as he starts the day off by breaking down everything you need to know about what's going on for the trading day ahead. At 9 a.m., Larry Pesavento takes your calls and questions live on the air for the opening bell as he hosts Trade What You See. At 10 a.m., Tom and Tommy O'Brien host the Bull Bear Trading Hour. At 11 a.m., it's Kevin Hinks and Alex Coffey from TD Ameritrade Network with Fast Market. Basil Chapman at noon with the Tiger Technicians Hour. Steve Rhodes hosts the Trader's Edge at 1 p.m. Dave White with the Power Trading Hour at 2 p.m. And Tom O'Brien closes out the day for the final hour of trading live from 3 till 4. Don't miss a second of our daily programming lineup. Tune in to Tiger TV every trading day live at TFNN.com. Educating investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow right now is trading up by 273. You get the NASDAQ up 10. S&Ps are up 13. Where is she? Yeah, 13 and a half. So let's go over and we got to take a look at this, folks. If you're going to see, so when that news come out that Walmart and Microsoft are teaming up to a bid for TikTok, you can see the acceleration in this. Walmart has done 35 million shares out here today. In fact, you got an ABC up. Yeah, this is an ABC up, man. In fact, it already was. This is interesting. It turns into a complex one, so it's still the same number. So let's see, 134, 118. You got $16. You got 27, 37, 43, 143. and we hit 139 out here today. Microsoft, if we take a look at Microsoft, what you have out here with Microsoft, that also on top side, up $7. $7, folks. Look at this. This is just amazing because the stock, I think, has, where is it? Yeah, 7.5 billion shares. In order for a stock to go up $7, folks, okay, that's a lot of shares and a lot of turn to get that going. Bottom line, it did. Now let's go over to Oracle, because the news structure out here was saying that it's Microsoft and Walmart against Oracle. And, Oracle didn't get the spike. You got a small spike, but just didn't get the spike. So we'll see where this shakes out. And what it's all about is that the way this executive order is, folks, is that you have, they expect if the deal's going to come down the pike here, it's going to come down the pike within 1 week. Okay, so it's fast. There's no doubt about it. Let's see what's happening out here. So you get this morning, you had Mark Meadows coming out saying that he's going to speak with Pelosi. Well, they just got off the phone. They had a 20-minute conversation. We'll see how that shakes out, or where it does shake out, if at all. And, that's going to get intriguing in itself, particularly because when you take a look at where we are time-wise, right? We're coming into the end of August, beginning of September. Most in that administration was saying that it's going to be the end of September before anything else gets done. So we'll see how that is shaken out. Some of the higher volume equities, well, Abbott. This is a big deal out here in COVID-19, folks. Abbott is up $8.62. Bottom line is that they got a rapid test. So Abbott's surged after its 15-minute test was granted emergency clearance by Trump, and the administration is going to buy $150 million of the test and a $750 million deal. The cool thing about this, folks, is that this test, it's $5 a test. It's a Schwab, 15 minutes. I guess you Schwab and pharmaceutical. Pharmacists can do this. So if that's the case, this is going to be at every CVS and Walgreens. In fact, let's go look at CVS for a second. I'm just curious. It's up 77 cents. Not up as much as it should be. But it would seem to me that this is where these things are going to get, it can change the aspect of how people are feeling across the country. If you can get a test in 15 minutes and it's $5, it's going to make a difference. So we'll see. Certainly Abbott is got some real juice underneath it right now. Abbott, if we go back to March, Abbott was at $61. You're at $1.11 right now. And that's all-time highs. That's basically all-time highs. We take a look at some of the other higher volume equities out here today. American Airlines is up 50 cents. You get Bank of America up 61. We'll go to these banks right now, because that was a great question, is that how does the rates affect banks? And all the banks, J.P. Morgan, caught a bid out here today. And I'm going to show you why, too, because this is where it comes down to the aspect of what is the spread between the 2, the 10, and the 30, and the 20 in the bond market, because this is how this works. And you can see J.P. Morgan caught a bid out here. J.P. Morgan can run up to 106. You're at 102. We take a look at Bank of America. Would you go with Bank of America? Well, that's a small bid. No big deal there. It's up 60 cents, but that's not a sign of strength. Let's see. I can't picture Wells Fargo being a sign of strength. WFC. Yeah, that's not going anywhere. Let's take a look at Goldman. Goldman wouldn't be as big as it anyway. So what ends up happening is this. I'll put this up here for you, so you can take a look at the bond market. So when you're taking a look at the bond market here, let me see, can I do a curve? Yeah, I can do a curve. So what will end up happening is this, is that when you do these spreads, what I'm doing is that I've just changed the structure inside of this, folks. Let me see, 3 months. Well, let me do it this way. Yeah, I can't explain this quick enough on the air. I can, but I just have to do a little bit more work on it before I start. So what ends up happening is this. The banks, the way that banks make big money, right, is that they basically are going to, borrow, on the short side. They're going to lend on the longer side, and they make the spread. That's how it shakes out. So today, this is a huge deal because the 10 did not move as much as the 30 in a huge way, too. So you can see this here that if we just put up, well, here's the 2 year. So the 2 year is yielding 0.15. The 10 year, I'm going to skip the 5. I'm going to go to the 10, is 0.74. And then we go up to the 30 year, you're going to see 1.49. So the way banks make their big money is that you're at 1.49 in the 30. You picture this, you're at a 30. Just go back to, today you go back to the 10, and banks are going to double their money. That's 0.75 to 1.50. You can see that. And that is on a non-leveraged basis. Now, you got to remember something. The banks are leveraging themselves 9 to 1. So on a non-leveraged basis, they're making basically 100%. That's how banks make money, and that's why you see that bids in there today. What we don't actually know out here today is that why did the long end of the bond go dramatically lower and higher in yield than the short end? Most of the times they all move together. It's very possible that with the Fed saying, hey, guess what? We think we're not going to go anywhere for about 5 years, that people are staying away from the shorter end of the curve, and they're saying, okay, that might be the case, but guess what? This can't go on forever, and we're going to basically hammer the long end. And my take would be that I would never say this can't go on forever, because I think all of us have learned quite a bit about the aspect that rates themselves. Who would ever think that rates in 35 years? I guess 50 years. Yeah, I don't know. 40 years. Would go from 14.5, down to 0.7 tenths of 1%, because that's what we've done. Dow up 250, NASDAQ up 13, S&P's up 13. We'll come right back.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors. If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, Trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Tom O'Brien.
Welcome back, folks. Dow's up 255. You get the NASDAQ up 6. S&Ps are up 12.5. Let's go over and we take a look at the, let's go to the GDX next. We looked at the GDXJ. The GDX, of course, is the larger gold miners. Bottom line is the same deal. You get a sideways move out here. The way the GDX is trading still looks to me like you want to go to those highs, which is the 45.78. We're going to take a look at a couple of the larger ones inside of that. So the weighting structure, Barrick Gold. Yeah, Barrick's a good setup, man. Barrick's down 65 cents. Hasn't moved out much out here today, but the bottom line is that staying at the top of the range. Newmont, same deal. Anico Eagle. Yeah, even better. Even better. Royal Gold. Let's see how the royalties are going. Same setup. Franco-Nevada, FNV. Yeah, they're all trading the same. Yeah. What they did, folks, is that they jumped over yesterday's highs. Okay, they basically where they were starting the week off. And the real kicker is going to be, where does this dollar go tomorrow? In fact, let's go to the euro right now, because that'll start picking. So the euro, same deal, but the difference is, you got to a higher high, you closed right in the middle of the range. The pound probably did the same thing. British pound, you're at 132.07. That's good. The pound, though. Yeah, no, the pound says it wants to go higher. The pound, let's see, we got to 132.84. Yeah, it did. That broke its highs. And then the yen. The yen's going to be the most important for the gold market. Yeah, see that? Oh, that's interesting then. So the yen is saying that it does want to get weaker. It rejected lower price out here, so that's going to be dicey tomorrow morning when we come in here then, man. Because when you look at so we just looked at those three currencies. When I look at those three currencies and trying to figure out what the dollar's doing, because most times, you can see how it's either gone into the highs, gone into the lows, how it's been trading. Today, it really had a sideways move. But when I do look at that yen wants weaker. When the yen wants weaker, most times you get a little tough trading inside of the gold market. So that's going to be a heads up for tomorrow morning, no doubt about that. But let's go to platinum. So platinum, thus far, is still way under gold, and in a dramatic way. We're down 680 today. You're at 933. Oh, this is a good setup, though. Okay, so this is a cool setup. Now, the platinum wants higher price. Platinum wants this 1,035 right now. What you did out here today, you got over the highs of the last 6 days. You get volume behind the highs. And, you're about, 1828. You're another $15 off the low. In all the cases inside of the metals, folks, they got off those lows by a very good amount. Copper, we go take a look at the copper market out here. We have with copper. Copper out there is trading up 2 pennies and 2.2 pennies. Yeah, see, this wants to break topside too. It looks to me that copper, folks, is a monster ABC structure on the way up. That's how this thing seems to be shaken out. If that's what we got, that is also saying that the bottom line is that we are definitely going to be pushing into inflation. So it just come across, Pelosi said that she is sticking with her demand of $2.2 trillion. So this is, I'm sure Meadows will come out next. When they're ready to do that, we'll be ready to negotiate and discuss. Particularly, as Pelosi said, tells reporters after a phone call with Meadows. So this was the first time that they met since the talks broke down on August 7th. It's gonna be a long way coming, man. What I'm having a hard time trying to figure out is that the aspect of, I know, folks, that the market is not the economy. I definitely know that, okay? Because it totally is. When you take a look at the amount of market participants, actually, people that actually own stock versus the amount of people we have in the country, it's not even close. That being said, where I say that politicians can just start brushing this thing off is that every single day, when you come to new highs, it's like, okay, you know, do we really have to do it right now? If you remember in 2007, 2008, when the Democrats and Republicans, they came, well, they were in session at that particular time, and then they didn't want to do a bill. And if you're in that market, then do you remember the market went down like 900 points or 1,100 points that day and the next day. I mean, it was so fast and furious, and then that bill got done the next day. They need a slap in the back of the head. That's kind of how they work, you know. Unless it's something that's going to basically put some bread in their pocket, then it's a whole different ballgame. But I suspect until we get some kind of a downdraft inside the marketplace, that stimulus package is going to be basically pushed down the road. I mean, that's where it just keeps going. It's just how it's actually set up. We go overseas. We take a look at a few of the markets overseas, particularly the DAX. Let's go take a look at the DAX, because the DAX loves to trade just as our S&P trades are the Dow Industrials. And guess what? DAX out here today, hanging at highs. The last high in the DAX is 13,313. We're at 13,096 right now. Bring this back. Yeah, same number. Now, what the DAX hasn't done, this is pretty intense, actually. The DAX has been in this consolidation at highs from October of 2017. Can you imagine that? October in 2017. That is, that's pretty intense. And then when it had its downdraft, you know, we're talking about a 2-month downdraft. So that 2-month downdraft took, wow. Now see, this is where, this is like amazing, actually. So the DAX, folks, okay, and the 2-month downdraft that it had took the DAX back 7 years. 7. And needless to say, it only took 6 more months to get to the highs again. But that is about as intense as you get, man. You know, so needless to say, we know that the elevators down are pretty dramatic. The elevators down in that DAX, I hadn't looked at that. Let me go look at the FTSE for a second. That is about as dramatic as you get. So, oh, this is interesting. Well, see, this has to do with Brexit too. The FTSE never even got close to its highs. Oh, the FTSE's still in tough shape, man. Yeah, this is the FTSE high out here is just 75.46. Bottom line, you're at 59.99. And the FTSE, oh, this is pretty intense. See, the FTSE took its market back to 2008. 2008. Dow right now up 200, Nasdaq down 20, S&P's up 6. We'll come right back.
back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as...
Whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us. And Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and to help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step by step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow right now up 202. You get the NASDAQ off 25. S&P's up 5. Bottom line is that S&P's, folks, NASDAQ sideways moves. Dow Industrials, we take a look at the Dow. They got a couple $100 underneath them. The Dow definitely stuck its head over the highs. And we pull this baby. And the Dow's still charging, trying to get up to its high. The high in the Dow is 29,568. So you get another 1,000 points in order to get to that high inside the Dow Industrials. What's going to be pretty wild out here in the next 3 or 4 days is to see what New York does, folks, in the aspect of laying municipal workers off. You can imagine office market in New York still really closed. That's a big base bringing big dollars in. So New York has 325,000 employees, and you have to give a month's notice before you lay anyone off. And they're coming up to, next week. Each beginning of the month, this is where this comes up. Like, okay, if we're going to lay people off, this is when we're going to give them the notice. There's going to be a lot of movement here because if, in fact, that starts coming down the pike, it's going to be a big number. The thing that's really sad about the New York case is the aspect that a lot of these folks that would get laid off basically are folks that were out here working when the COVID was out here. It's a mess. That's the real bottom line. If you see in the Journal today, they had the head of related companies urging large companies to bring their workers back to work in New York, to basically support the city. And I can see it. I mean, I get it. There's no doubt about it. We're all in small business, man. And the bottom line is that you're in a small business in New York, you depend on that office. The villages, there's people that are out in the villages right now, but the office, that's, all of a sudden you get a business, and then all of a sudden you're out of business. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, and fly with it. Thanks for being here, folks. Have a great night. Have a safe night. Come back and visit us tomorrow morning. Tommy kicks us off. Great show. Please tell your friends about TFNN. Tell them to go to YouTube and subscribe. It's free.